All right, guys, welcome to the podcast. Welcome. We
Thank you.
appreciate you having you here today, Robert.
Awesome.
So we are into February 2024, about to hit the spring market. So let's do a quick chat about the market. How's the market, Jason?
Hey, activity is up and booming. I'm busy right now, so I'm very thankful. It's exciting to see, this is definitely a big difference from last year, this time of year. So, looking forward to seeing what the market's to bring.
Yeah, definitely. I know we
Absolutely.
had some unemployment numbers come out. Job report was better than usual, so we may not be seeing rate cuts as aggressive as we were hoping. But been consulting with a lot of buyers and sellers so far this year. Everyone's very excited, so we're kind of interested to see where that goes. But we have a very interesting topic today that a lot of people don't think about, but we think about a lot: home insurance.
Oh, yes.
We have an insurance specialist here, Robert.
Thank you.
Yeah.
Thank you.
So, why don't you give us a little bit of a lowdown what you're seeing with
Awesome.
insurance
Awesome.
these days?
And so just a brief introduction to everyone. Hi, my name is Robert Sanchez. I'm your local insurance agent here. The name of my agency is Robert Does Insurance Services.
Yeah.
I'm here in-house in the same office as the host team here in Downey. So I'm really excited about that. But as far as home insurance goes, let's talk about home insurance because that has been one heck of a roller coaster in the state.
Yeah.
And not just in the state, but really in the country as a whole. Some states have been hit a lot more heavier than others. I'll give you an example. California is one of them. New York is a big one.
Interesting.
Florida's a huge one that's been hit, especially cataclysmic events that we've been having.
Is it due to like the hurricanes and flooding and things
Right.
like that?
So all of the, Mother Nature is really kicking us hard.
We're in a storm right now.
We're in exactly. SoCal is literally flooded right now as we speak. You go outside, there's a river everywhere you go in any street. And so, prime example right now, even with flood insurance, for example, lots of high number of claims, for example. Topple that with the high inflation, the high cost of building materials, the high cost of importing and exporting. It's a really, really huge burden, not just on top of the insurance companies, but also on top of realtors, lenders, and even the consumers. We're all connected with it. So even myself as an insurance agent, I'm even struggling myself to be able to place any of my clients in new policies.
Right.
Why? For lots of reasons. So within, let's just say the past 4 years when the pandemic hit, right? What happened when the pandemic hit? We had a massive shutdown. The world stopped essentially, right? And that was a huge wrench in the gearbox in terms of the economy. And so on top of that, from 2020, 2021, and even till now, right? Let's just talk about California, for example, not just even the other states that have been dealing with cataclysmic events. But here in California, we had such a horrible fire season during the pandemic and even right before.
Right.
Oddly enough, check this out. In 2017, there was literally over 13.6 billion
That's crazy.
in losses. Excuse me. That was 2018. 2017 was 15.4 billion
Wow.
in losses.
Big numbers.
Huge numbers.
Yeah.
Huge numbers. And so when you have for every dollar of premium that a carrier is collecting, if they're paying $1.85, that's a huge problem.
Right.
That's a huge problem.
Not
And so
sustainable.
exactly. And so one of the things too that people have to consider is here in the state of California, insurance is heavily regulated. Okay. And so with that being said, it's very difficult for insurance companies to raise their rates. So especially when it comes to the home insurance markets, there's a law in the state of California. A lot of people don't know about this, but Proposition 103. Proposition 103 was a law that was passed over the last 20 years. And essentially, again, politics, right? Essentially, it's supposed to help consumers
Yeah.
on one end. But on the other end, it makes it difficult for carriers to stay sustainable, profitable, or even solvent to be able to cover claims while continuing business on an annual basis. So it's really interesting when you look at it, when you look at that, how it's a double-edged sword.
Yeah.
At the end of the day, who's suffering?
Right.
The consumers.
Right.
What's happening right now in these past few years is you have carriers that are pulling out of the market You have carriers that are completely pulling out of the state. You have some carriers that are temporarily suspending new business. So like some of the carriers that we're familiar with, and these are big players that we're all familiar with, guys.
Yeah.
I'm just gonna name a
Well,
few.
because a lot of homeowners like to try to bundle with the carrier that they have already, and they think that that's going to be like an easy way to go until, you're going to list some of them off. They don't do home insurance, which is crazy, right?
And I was dealing with one of those particular clients yesterday. So I'm going to use Farmers Insurance as an example. Big carrier, right? So Farmers, and I'm getting phone calls just recently, literally this week, from clients that have a Farmers policy that's going to expire at the end of this month or even next month. Okay. And what they're telling me is they're getting a letter from Farmers saying that we are not going to be offering home insurance in the state of California going forward. We are non-renewing you.
Yeah.
Wow.
So they're getting a non-renewal notice.
Yeah.
So they can't stick with Farmers at
How much notice do they get from Farmers before their policy lapses?
Usually with 30 to 60 days is what I'm seeing. I've been seeing some like around 60 days. It gives people time.
Yeah.
They're not going to just cut you dry.
Got it.
Within a very small window. They got to give you enough time.
Yeah. Is there regulation around how much notice they have to provide you?
Usually within 30 days minimum.
Okay.
Usually 30 days.
Okay.
I don't see anything less than that. And at that point, they'd be doing a disservice to anybody.
Sure.
Client at that point.
Yeah, definitely.
So with that being said, that's one carrier. That's Farmers, right? We have other carriers like Safeco, which is a Liberty Mutual company, right? Huge. Liberty Mutual's huge. Allstate, State Farm. You have other carriers like them that are big name companies, right? They're putting a pause on new business, or they're just completely not writing new business altogether.
Right.
And so they're constantly bumping heads also with the State Department of Insurance, because now the State Department of Insurance is saying, hey guys, if you're not going to offer this, you can't offer anything in the state of California, period.
Oh, wow.
Because these insurance companies are not just doing business with home insurance. They're doing business insurance, life insurance, depending on the type of carrier, car insurance, right? And that's a whole nother animal too, with car insurance that's going on right now in the state. It's a whole nightmare with that too. Very, very similar, but on a different avenue. So now, what's happening to those individuals, those policyholders right now that are receiving these non-renewal notices from the carrier, right? Well, there's still carriers out there. There's still options out there, right? Unfortunately, it is going to cost them more.
Right.
Because the carriers that are available right now, what are they doing? They're raising their rates. The state is allowing rate increases, of course, to compensate for the huge losses that they're getting.
Yeah.
And so, unfortunately, I had a client yesterday that I spoke with. His annual premium was $1,200 with Farmers, right? This was before they're canceling him. And I tell him, look, if I quote you with my other carrier, my one carrier that is available right now, your minimum premium is going to be a little over $2,000.
Wow.
Huge difference.
Huge difference.
Huge difference from what he was used to. And it's not a bad carrier. Again, it's just the current market conditions that we're dealing with.
Right.
Things are just going to be more expensive right now, unfortunately.
Yeah.
If you can obtain it.
Yeah. When we, now when we're getting into escrow, we're pulling that insurance policy immediately, because that could be the difference between qualifying for that house sometimes.
Oh,
Right.
absolutely.
Yeah.
That's like the first conversation. Like once we get into escrow, that's part of our inspection investigation. So like once we do the inspection, we're going to see if we qualify for the insurance, and if we don't,
Right.
then you're not going to be able to do the house.
Yeah.
Exactly. And you know what? That's a very good point that you guys brought up. And I've actually consulted some of my lender friends and realtor friends about this. And I say, look, if you have a client that you're pursuing to potentially close a deal, right? Before you guys even go into the whole escrow process or anything, start shopping for the insurance. You already know what property they're looking at.
Right.
Start shopping for the insurance right off
So
the
even
bat.
before escrow.
Even before you know what house they're looking at, start shopping for it now.
Yeah. What's the California marketplace that?
So there's an insurer of last resort in the state of California called the California Fair Plan. It's an association. It's not funded by the state. It's its own independent association. Their funds are comprised of a pool of every insurance company in the state of California.
Yeah.
Every insurance company in the state of California that operates in property and casualty, when it comes to like homeowners insurance, for example, property insurance, they all contribute to this fund. Every single one of them.
Okay.
They have to if they're operating in the state of California. So the California Fair Plan, which is the insurer of last resort, is a reason why it's the insurer of last resort. Okay. Typically, they only cover fire claims. Okay. fire claims, and there are some additional coverages that you can add to make it a little more whole. But one of the biggest drawbacks between going from a standard home insurance policy, well, let's say Farmers, Allstate, any of those guys, right, to going to a California Fair Plan policy is you're going from a standard home insurance policy to a cookie cutter policy.
I see.
And it's going to be a lot less expensive, sure.
Mm-hmm.
But it's not going to cover a lot of the typical coverages that a dwelling policy or home insurance policy would have, such as like liability, Medicaid coverage, personal injury coverage, things like that.
So somebody probably that is doing a VA loan wouldn't qualify for that, because if it's specific to like dwelling coverage, I believe the VA requires.
If there's a lender, and that's a good point too, and I've run across that issue too, where a lender would not accept the Fair Plan policy.
Interesting.
Right? Because of their underwriting guidelines.
Right.
I'm sure VA loans probably have specific underwriting guidelines.
Pretty strict. Right?
Now, so what I do know is when it comes to insuring a property, and I know when it comes to the lenders, they're concerned about their mortgage loan, right?
Mm-hmm.
When it comes to the covering the insurance, the property, we as insurance agents, the insurance companies, they are covering the property based on the reconstruction value, not on the value of the end product when you see it's listed.
Yeah.
Just because the property is listed for $1 million does not mean it costs $1 million to reconstruct it if it was burned from the ground up.
Yeah, right.
Right? Could be a quarter of that, maybe half of that, just depends. And so that's really where the coverage of insurance comes into play when it comes to the property itself.
Got it.
Is the reconstruction value of it.
That's good to know.
That is a key component of it, because that right there is really where all the cost comes from.
Yeah.
Evidently. Well, that plus also the factors too of the area location. Maybe the property might be in a high risk fire zone.
Right.
Maybe. Then at that point, sometimes they have to go to the Fair Plan, unfortunately.
Right. So if it was the exact same dwelling in Santa Monica versus like East LA, all natural hazard variables the same, the insurance policy would cost the same. Even if the one in Santa Monica is like over $1 million and this one in East LA is like 700,000.
No, it's going to be different because each property is going to have different reconstruction values. Building materials are going to be different on each property.
Right. Well, considering that's hypothetically, the building materials are the same.
But if the risk is exactly the same, property specs are the same, location is the same, the premium should be the same.
Okay.
There wouldn't be any different than that. But we're talking about if it's identical.
Yeah.
I don't think any insurance agent will ever see a policy where it's identical from home to home because there's so many factors that come into it.
Absolutely.
But yeah, if that was the case and they were identical, then the premium wouldn't be any different.
Yeah.
Unless you're shopping from carrier to carrier, every insurance company is going to have a different price.
Got it.
For the same insurance policy.
Yeah.
That's also where a consumer would come into play in terms of shopping around. Hence why right now, when people are trying to purchase a home, shop around, get quotes.
Right.
They're all going to be high.
Yeah.
They're all going to be high.
Yeah.
Pick the lowest, highest.
Yeah. Yeah.
Essentially,
what other choice do you have at this point?
That or the Fair Plan. But the thing is, it's one thing if you're okay for underwriting purposes, your lender allows you to get the Fair Plan policy so you can get your home. But, as a homeowner, do you really want that? It's your house.
Right. When it comes to the Fair Plan, because it's like a state program, from when they first start the application to getting coverage, how long does that process take?
Okay,
because escrow sometimes is a very tight time.
That is a very good question. That is a very good question, because from transitioning to this past fall till now, the California Fair Plan has gone through such a huge transition in their systems. Mm-hmm. So that's created so much delays right now. Like for example, I had just recently insured a rental property for my father in Lake Elsinore, in Hemet. They purchased a ranch area, some small plot of land, and they had 2 mobile homes. Mm-hmm. Okay, so I had to do my risk analysis, get everything done, submit the application to the Fair Plan. Mm-hmm. Turnaround time for that probably took, I want to say, almost 3 weeks.
Wow.
Almost a month.
Wow.
Yeah.
So if it were at a 30-day escrow, that would be...
That's gonna fall. And I'm not the only insurance agent that's run into that.
Turn it into 45.
Right. In other words, get more of a lead time if you can from escrow. If you already know ahead of time that, hey, Fair Plan's going to take a while, then it'd be more prudent to be proactive in that regard.
Let's get started on that.
Exactly.
Your home search.
Exactly.
There you go.
Exactly. Because if you already know that property is going to be declined from everybody else, because let's say it's in a high fire zone.
Right.
A lot of houses in Corona are like that.
Yeah,
I don't know
I
if you
mean,
noticed.
the area I'm in North Glendale, it's all high fire zone.
Perfect
Yeah.
example because of the hills, the
Mhm.
brush. You see it when you drive around it, right? You
Yeah.
can't ignore it. And so, when all those carriers are going to say no, I mean, you have to go to the fair plan. You know,
Yeah.
and unfortunately, that's your option unless a carrier is willing to take it. Which there are some.
Yeah.
There are some that carriers that actually do take high risk homes.
Right.
You know,
Sounds expensive.
but it is.
Yeah.
It is, and that's again, the more the risk, the more it's going to be expensive. Why? Because if something happens, who's going to have to cough up the dough to cover that property?
Right.
The insurance company.
Right.
And of course, with good reason. You're a consumer who's buying an insurance policy for the sake of having coverage for your assets, right?
Yeah.
You know, you're doing what you're supposed to. But of course, you know, if we're talking business here, if they're receiving $1 billion and they're spending $2 billion,
Doesn't make sense.
they're going to go out of business.
It's just bad practice.
It's just that simple.
Yeah,
It's
yeah.
that simple. And so a lot of that's been going on, you know, and of course, you know, people like to think that insurance companies just have unlimited deep pockets. People don't realize one thing, that as you're making payments to the insurance companies, as quickly as they're receiving money, they're paying out claims. Right now, as we speak, we have insurance companies making home insurance claims,
Right.
flood insurance claims,
Right.
as we're speaking right now.
Right.
You know, it's constantly revolving. And so if the premiums that they're receiving in are not sufficient, you're going to have carriers like State Farm, Allstate, and all these guys, even more on a mass scale, leaving the state.
Right.
And that's going to put more pressure on the state reinsurance market, in this case, in the California Fair Plan.
Right. Okay.
And, you know, that's where right now our state governor, Newsom, and even a representative, Adam Schiff, they're trying to pass legislation to, like, you know, moratoriums as well. But essentially, you know, to prevent carriers from doing that. But then this proposition that we have isn't helping either.
Right.
So, you know, you have the political side of it. You have the business side of it.
Ultimate rock and a hard place.
It's just a constant game of tug of war.
Yeah.
Essentially, from what it looks like.
So I guess this might be two different situations. We talked about shopping for home insurance as you're shopping for homes, and also for homeowners currently. What are some other best practices they can kind of...
I'm glad you asked that. And I actually have a list here of good things, good suggestions that honestly anybody can do when it comes to shopping for home insurance. And you know, regardless of whether we've dealt with the pandemic or any market conditions, you know, these are just good things to always follow. So, one, contact your insurance company. First, start with your insurance company, the one that you have. You know, if you get a canceled notice or a non-renewal notice, first reach out to them. You know, see what they can do. Or first of all, make sure that that's even correct in the first place, you know, because the last thing you want is to like think you're getting canceled when it was a mistake or something.
Yeah.
Hey, we're humans; they make mistakes too.
Right.
So that's the first one. Here's a big one that people are not doing, but maybe more so now because of the fire seasons that we have been having. But take more care in fireproofing your home and trying to fireproof your home.
Fire hardening, right?
Right. Try to reduce the risk of fire exposure claims in your
Will
house.
the home insurance company send out an inspector and require fire hardening?
They typically don't do that if they're... I don't hear of inspectors doing that when they go. So like if you purchase a home insurance policy, the insurance company does order an inspector to go to the property, usually within 15 to 20 days after the policy is bound.
Right.
An inspector will go do a physical analysis of the property to make sure that what they're insuring isn't some dilapidated house that's about to fall apart, right? So that's what they do. They will look to see if, hey, you know, this roof's got dry rot. This is an underwriting flag. I have a situation like that.
That just happened to me. So
Yeah?
we closed on a house in Southgate. Everything was fine. We closed on it, and they contacted me 2 weeks later. And they said, hey, Progressive is not insuring our house, or they want us to replace the roof.
Wow.
And
Yep.
they're like, well, our inspection was fine. We did a pre-sale report with the city. Everyone else was fine. But so they had to scramble and find insurance.
Man.
Yeah.
Perfect example. I dealt with one of those deals last year, actually. Client that was in escrow. Cool. We got the policy. After escrow and everything was done, 15, 20 days, the inspector went to go check out the property. The house was fine, but there was this one particular niche corner that had nasty dry rot, right? And so that right there was enough for the carrier to say, nope, we're going to cancel your policy.
Wow.
And this was after he already got it. He already got his house done, right? The deal was done.
Mm-hmm.
And I'm like, okay, hold on a second. I was like, just get that portion repaired. And we'll submit that information to the insurance company.
Mm-hmm.
Underwriting will accept it because they only need that portion repaired.
Yeah.
Ideally, they prefer you to have a full new roof,
Right?
Because that's what they want. But they only flagged you for that one section. Luckily, he didn't have to get a whole new roof right then and there.
I mean, new roof is great, but I mean,
but a new roof is also very, very expensive.
Yeah.
Easier said than done. So fixing a section that just has dry rot versus repairing the whole roof is a lot more feasible, right?
Right.
So got that taken care of. Provided the information of the insurance company, proof photos, everything that they needed. Boom, no problem.
Nice.
And so that's a situation like that where you can do damage control, right?
Yeah.
But to answer your question about inspectors, I mean, normally if they do see a fire hazard, though, yes, they will say something like, for example, if a tree is leaning on top of your roof, a big old tree is leaning, that's a huge fire hazard, a huge flag. They're gonna probably order you to make sure to remove that.
Yeah, they won't be the only agency to make you do that. We had our natural hazard disclosure, SNAP NHD, right?
Yeah.
Come and in the very high fire zones, they will require fire hardening.
There you go. There you go.
Just good practice for you.
Right, exactly. And so again, one of the steps that now that I'm recommending is take whatever steps you can to mitigate fire brush around your home. Okay, contact your local agent. That's another one. So yes, you can go to your insurance company. You can go to the agent that even helped you. That's another person, whoever that agent is. If it's a broker, if it's an insurance broker. So a lot of times I've had people ask, who should I go to for my insurance, right? Like they don't know where to, right? Sometimes I'll just go online, maybe Google Geico or whatever. Sure, we're all used to that, right?
Yeah.
But I tell them, look, you can look for an insurance broker like myself. I'm an independent agent, also known as an insurance broker. Insurance brokers have the ability to look at different insurance companies.
Right.
Normally, we have access to multiple insurance companies. If you go directly with a captive agent is like a farmer's agent, an Allstate agent, a State Farm agent. They represent just those carriers. Sometimes they might have access to other carriers, but most of the time it's either Farmers, Allstate, or Progressive or AAA, right? And so contact different agents and look at your options there. Yeah. Another one too, and I leave this one more for the last resort, but you can always contact the Fair Plan as well too. That is a last resort option, but it is an option on the table. Yeah. And one last option and this is a good one too that I'm actually having to work with, is consider looking for an E&S carrier. What is that? So
what is that?
Exactly. E&S. So E&S stands for excess and surplus lines. So this is a whole nother animal when it comes to insurance, right? So in the insurance market, we have what's called admitted carriers and non-admitted carriers, okay? Admitted carriers are like your Allstate, Farmers, AAA, those guys, right? Sure. Your non-admitted carriers might be like, for example, Scottsdale's insurance company or a different carrier. These are carriers that are authorized to transact in the state of California. However, they're not regulated the same way as the admitted carriers. Interesting. But that doesn't necessarily mean that these companies don't have any regulation. Yes, they do. And a lot of these companies are A-rated with the bureaus, like the credit bureaus. They're like A-rated with the credit bureaus. And so I'll give you one particular carrier an example that I utilize right now. Homesite. Homesite is an insurance company, if I'm not mistaken, owned by Progressive. Okay. But this division of Homesite that I work with is an E&S carrier. They're an excess and surplus lines carrier. So it's another option for customers. Sometimes it could be a little bit more expensive. Sometimes it could be a little bit better in price. It just depends. But it's another option available for customers. You can get a standard home insurance policy with one of these carriers. Yeah. In my insurance industry, a lot of times insurance agents don't like to go with excess and surplus lines carriers sometimes because of the cost or because of the fear of insolvency, because they're not fully regulated like the way the other carriers are. And again, that's just, the whole misconception of, we should never go through them. No, that's a great option to go to, because a lot of those carriers, they have the capital. They have the capital to back it up. And a lot of these companies are owned by other bigger companies that we're familiar with. Right. They just have divisions. Yeah. So that's another option, excess and surplus lines. And that's actually what I'm utilizing right now for home insurance. Got it. So just to give you
are their premiums much higher? And
they tend to, well, at least what I'm working with, yeah.
Okay, and then can they do whatever they want with the premium year to year? Like, can it be like $2,000 one year and $4,000 next year, or?
Can it have an increase? I mean, sure. Carriers, I mean, it can have an increase. I don't expect it to be that high.
Yeah. Okay.
But I have seen premiums high like that,
Yeah.
even with your standard admitted carriers. You know, like,
Sure.
hey, my premium went from like 1,000 to 2, or went from 1,000 to 3.
Yeah.
So I have seen that.
Yeah.
A lot of times, the reason why those rates go up, and it could be because maybe that home had a huge claim.
Yeah. So I was going to ask about that because I've had a associate who couldn't close on a home last year because their buyer had claims on their previous house, and then no insurance agency would insure on them on the new one, and they did their best. I think they extended it out to like 45 days, and eventually they had to cancel, and they just couldn't get insured.
Wow.
So can you talk to us a little bit about, obviously if you have to file an insurance claim, that's what it's there for, but what are
Right.
some things you need to know when you get to that stage, or deciding between whether or not you do want to file a claim, or maybe?
Good question. Obviously, if you have home insurance and you really need to use it, use it. That's
Right.
what it's there for.
Mhm.
You know, if you have some major catastrophe in the home where you need to use it, then use it.
Right.
You know, but obviously for something small where you can hire a handyman to fix or something like that, or do a small repair, might not be worth using your insurance because one, you'll have to pay your deductible for whatever it is, right? And then the carrier's got to come in and do their portion, and so now you have this claim through your policy period, and claims can be on the record for like 3 to 5 years.
Okay, that was going to be my next question.
Between
So 3 to 5
it
years.
could be like 3 to 5 years depending on the claim, and so if you have someone like for that example you just gave me, and that individual had so many claims within, let's just say 3 to 5 years,
Mhm.
right? Depending on the kind of claims, if it was like water damage claims, something exploded or whatever
Yeah,
the case may
yeah.
be, right? Well, they're not just looking at the future insurance companies that you're shopping with. They're not just looking at the dollar amounts too, but they're also looking at what type of claims too,
Got it. Okay.
and how frequent.
Yeah.
Because it's crazy how they have so much statistical data to know when you're going to have another claim.
Mhm.
It's kind of like they
Yeah.
can predict.
Yeah.
And so it's like a pattern. They see, I'm like, dude, you're having this claim after claim after claim. If we take you on, you're going to have claim after claim with us.
Right.
So they're seeing that too.
Right.
So that's
Yeah.
that's where
Oh,
it can
that's
be
good to know.
tough.
Yeah.
Usually those individuals unfortunately tend to have to go through the fair plan,
Yeah.
but even the fair plan can deny a homeowner
Yeah.
too.
It's, what do you do in that situation?
If you're trying to buy a home, I guess you're not buying a home.
Wow.
You got to wait.
Wow.
You got to wait till these claims start to come off,
Right.
because it's perfect example. I'm just going to use car insurance for example.
Yeah,
Okay.
sure.
High risk drivers. Okay.
Right. Oh, right.
For
Or DUI drivers.
For example, all right, look, I've had people that had 2 or 3 DUIs. I don't know how they still had a license, but they had that plus a suspension, plus an accident, plus a ticket, and I'm just like, how do you still have a license?
Yeah.
But you still had a license.
Mhm.
Premiums were up the wazoo.
Yeah.
This person could not get a car, period, right now because the car payment was going to be so high. The insurance was
I can't even
ridiculous.
imagine how much that was going
What he's paying in rent just for car insurance, and so it's like you got to take Uber or the bus for a while until your driving record gets better.
Yeah.
And so those are one of those rare instances where like, man, your record's all jacked up. So if you have a home insurance, if you have an individual or a married couple or whatever, and they've had this claims history in previous homes, that follows them for the new home until they come off.
Yeah.
Just like your driving record. You go out there, you get tickets and accidents. Well, even if you switch from AAA to Geico, when Geico runs your driving record, boom, all the tickets and accidents are going to come up.
Mhm.
So same thing when you're out there securing a new home insurance policy, whether it's Fair Plan or any other insurance company, they check what's called CLUE. CLUE reports are classified loss underwriting reports. Underwriting exchange, CLUE,
Mhm.
classified loss underwriting exchange.
Mhm.
It is basically a centralized database that has all the claims.
Wow.
And so all carriers can pull this information.
Yeah.
So you can't, it's not like people do this all the time. They'll call me saying, oh yeah, I need a quote for this and that. And people lie.
Yeah.
There's buyers that are liars and there's people that are honest, right? Right? And so you'll have some, but I've had people that shopped elsewhere, chose to withhold information, but the second I run things, I'm like, oh, wait a minute, I can't, and my carrier's going to deny you because you had this water damage claim, then you had this fire claim, then man, you had this roof claim too.
I mean, similar with loan officer and underwriter, right? Like you're not straight up with them. Also, when they run your file, the
They're
underwriter,
gonna figure it out.
they're gonna find out.
And if you think about it too, you as the consumer, you're really just shooting yourself in the foot and wasting your time at the same time,
Everyone's time.
everyone's time that's involved, like the loan officers, get involved. There's a lot of work that gets involved in pre-qualifying somebody.
Right.
Us insurance agents, when we're trying to quote a policy, we have to assess the evaluation of the property. I have to look up county specs and information.
Yeah.
You know what I mean? And so, there's a lot of time that's involved in it. So
Yeah, and I'm sure we're happy to do the legwork for our customers.
sure,
We just ask them to be upfront with it.
Exactly.
Because they will run your file and they will find it. So we're here to help. We're happy to help.
Absolutely.
But please help us help you.
Exactly. And that's why I always say, you got buyers that are honest, but then there's buyers that are liars.
Sure. Right.
Hey, I mean, who hasn't gone to Walmart and saw an item on a shelf for $1, but it didn't belong there? It was on a $15 shelf. You go to the cashier, you'd be like, this was on the $1 shelf.
Yeah. Right. No, absolutely.
So, I mean, just even in this case, especially because we're in the financial services sector,
Yeah.
we're going to see a lot of people too that are going to try to hide things under the rug that they can't.
Right.
Yeah.
Fortunately, the truth will always come out. It'll always resurface,
Definitely.
no matter what.
Yeah.
And so,
Awesome.
yeah, it's very interesting, gentlemen, what's been going on in the home insurance market. I mean, I'm hoping that this year, 2024, because last year was a roller coaster too, but I'm hoping this year things will start to kind of stabilize a little bit more. I'm really curious to see how things are going to pan out on the mortgage side too,
Right.
because everything, we're all tied in.
Yeah.
We're all tied in hand to hand, honestly.
Right.
And so what affects you will affect me. What affects me will affect you one way or the other.
Yeah, definitely.
At some point, whether if it's now on a short term or a long term scale.
Right. So, I mean, that's why I appreciate you coming on.
Oh, yeah,
and this
totally.
conversation. It was extremely
Right
enlightening.
information.
Yeah.
Absolutely.
Yeah.
No, thank you. Thank you.
Now, when you say stabilize, what do you see? Do you see rates coming down? Do you see those other farmers coming back to California? What do you think is going to happen?
Combination of it all. So a combination of more stable premiums where maybe the carriers aren't having to do so many rate hikes. Maybe the state will be a little more lax on the rate hikes. At the same time, we also we're at the mercy of Mother Nature too,
Right.
which, we're not off to a very good start this month.
Hopefully, we're just getting it out of the way. Yeah.
Maybe, let's just get this off the first quarter, right?
Right. Yeah.
So, so in terms of claims, that's if not probably one of the biggest ones. Claims, if the claims aren't so high as they've been the past 5 years, that's going to be a huge contributing factor in the premiums level and getting better. On top of carriers wanting to come back into a healthier market.
Right.
Okay.
If the market isn't so healthy, of course they're going to want to jump ship and not want to do business like a lot of these carriers are doing.
Yeah.
I don't blame them. I get it, but at the same time, it's dang, it sucks for a lot of us consumers, right? Any of us.
Yeah.
And so premiums, regulation with the state, carriers not pulling out and coming back in. And so there's also a responsibility too on the individual consumers, I would say, when it comes to the homeowners, the property owners, right? One of the things that I've been noticing that insurance companies, risk advisors analysis I've been trying to push out more is encouraging the consumers to do more risk analysis on their home, to do more fire prevention probably, right? Here in the state of California, we have floods, earthquakes, fires, landslides, mudslides, right? We're only missing tornadoes.
Yeah.
which I
Knock on
think
wood.
we had once or twice.
There was one in Montebello last year.
Oh, in Montebello, exactly. So there was that tornado. You had a little cyclone, but assuming that hopefully we don't have all those cataclysmic events that on top of again the rates, people not doing as many claims,
Right.
Hopefully more homeowners putting more care into fire prevention in their property, right? all of that will contribute to a better market stabilization. How soon? Man, I'm really hoping within this year and even next year.
Got it.
Honestly,
Okay.
I'm really hoping from what I'm seeing. But again, the economy is also a huge factor.
Right.
You
right.
know, because if our inflation is going to continue to be as high, and from what I've been hearing, because I watch the news a lot,
Yeah.
and so what I'm hearing about the current prices of inflation with not just gas but everything else,
Mm-hmm.
things are not going to go back to pre-pandemic.
I don't expect it ever will.
Yeah, they're not going to go
Those days are-
pre-pandemic.
Yeah.
I mean, I have seen gas prices go down just a little bit here and there, but it's
Yeah.
tug of war with that.
Yeah.
Mhm.
But if that's the case, premiums will go down a little bit, but they will not go down to pre-pandemic.
Right.
Why? Because now everything is so much more expensive.
Right.
So just building materials, for example,
Yeah.
labor, construction,
Yeah.
construction crews. If you're trying to hire contractors right now,
Mm-hmm.
oh, have fun with getting quotes.
Right.
if
Extremely.
you're trying to hire contractors right now, like anyone I know that's dealing with flipping homes right now.
Right.
They're paying more to flip their homes.
Yeah.
So
Well, I guess we'll have to definitely see how things go. We're hoping
Right.
for the best.
Yes.
I did love you talking about best practices that homeowners can do, so it's not completely out of their control.
right. There's a lot of things that homeowners can do,
Yeah.
from shopping to insurance to, take care of your home, take care of your
Right.
property.
Be mindful about claims.
Be mindful of claims. If you really need to use it, if you really need to make a claim, make a claim. That's what you have your insurance for.
Sure.
But if it's something that's very minor,
Yeah.
very minor that doesn't require, because there's a lot of people that are just claim happy.
Yeah.
I know a lot of people that are claim happy, whether it's their car, their home, whatever, right?
Mhm.
And so if it doesn't need to be on a claim and you can handle it, perfect, and take care of it. But if
Yeah.
of course it's major, use your insurance. That's what it's there.
100%.
Other thing too I want to touch up on is people that own pools, swimming pools.
Mhm.
Okay, on the safety side here, because I know a lot of homeowners are slacking when it comes to either fencing their pools or covering the pools. And this is one thing that I want to hype on. Please be very mindful on the fact that if you have any guests come over or even your neighbors
Mhm.
and you have an unfenced pool, number one, if you have a liability claim for that and you have an unfenced, uncovered pool, your carrier is going to deny you.
Yeah, it's also required at the close of escrow to have a fenced or a covered
Yeah.
pool, and it's building code. So
But there's a lot of people that don't have it, believe it or
I
not.
mean, it's an
After the-
eyesore or whatever.
Right,
Yeah.
right. And so, for the sake of that, because you'll have carriers that will deny you for that completely if it's not even covered,
Right,
just because of the risk exposure.
right.
So that was another thing too that I want to touch on, because I'm running into a lot of people with swimming pools.
Yeah. Well, it sounds like there's a lot of great information shared here, and sounds like we're gonna need to have you back. To
Oh,
see-
yeah.
Oh, yes,
Totally.
absolutely.
Yeah.
I'd love to come back.
Great
Yeah.
information.
So with that, how can they reach you if they have more questions or just want to talk insurance?
Absolutely. So, you guys can reach me either through my cell phone number, 562-205-6159. Call or text me. You can go on my website as well. It's www.robertdoesinsurance.com. Again, that's www.robertdoesinsurance.com.
Easy.
Easy
Perfect.
peasy.
Perfect. Cool. Well, do you have any other questions, Jason?
It was so helpful. I'm happy that I'm able to articulate better to my clients why home insurance has gone up.
Right. It's also nice to have a good
Oh, yeah,
insurance
totally.
broker to.
Yeah.
I appreciate that. Thank you.
Well, we really appreciate you taking the time to talk to us
Thank you,
today,
thank you.
and we'll definitely have you on soon.
Absolutely. Thank you. It's been a pleasure.
Okay.
Appreciate
thank
it.
you.